Good morning, good afternoon, everyone. I hope you're doing extremely well. My name is Romain Danielou. I'm super happy today to present you our latest opportunity to invest in this land parcel that we got under contract for a pretty steep discount in order to entitle it for a 365 RV park. So we're going to go over the details today. I hope everyone is doing well. We're going to spend the next 45 minutes together and go above all the details in terms of the data room, the pro forma, the opportunity, who we are, how do we work the entitlement, and how do we exit these parcels. Again, LandQuire was created 5 years ago. We are a land investment private equity platform. You buy shares in SPVs that acquire land parcels in which we have a pretty steep upside in terms of the discount that we get through the open data. For you to remember, we do anywhere between 5 to 10,000 offers off market a month in order to discover those underused, underappreciated land parcels that have pretty exceptional upside in terms of the entitlement through the density that we find for the best and final use for developers to buy us out 24 to 36 months down the line. The summary of the operation today is very simple. We have a minimum investment of $100,000 per investor. We offer a preferential return of 10% per year for investors on the equity they invest, plus anywhere between 55 to 70% of the project profit, depending on your ticket size. The total fundraising as equity is $2.153 million today. And again, our average ticket size at LandQuire is right around $200,000. So we will, based on statistics and what happened over the last 5 years, we would roughly have 20 investors in that specific portfolio. The financing structure, like I said, is a preferred equity. We do have $900,000 of seller financing that needs to be paid as a balloon payment in 36 months after closing. The goal here is to subdivide the parcel in 365 RV paper lots. And the beauty about this parcel is that we already do have a full PUD approved by the city. And we will go over the details and review the paperwork together in the data room in a second. The average lot value fully entitled pre-construction, what I call the paper lots, will be right around $15,000, which is exactly the price of the exit that we're targeting for a developer to buy us out. Again, as a note, there is a recent park that was sold less than 100 miles away from us, an institutional size resort RV park, which is exactly what we're going to be entitling this parcel for, that sold for $33 million, which represent $88,000 per lot. The beauty about the business model that we're putting together for a developer here is that we're exiting him at $15,000 per lot. For him to actually build this RV park, based on my knowledge and the previous experience that we've had, is that as at the moment, the construction for a full RV park with the kind of amenities that we're designing, the developer will probably spend right around $25,000 to $30,000 per lot in order to fully build and open the park. So if you add $15,000 for the land, $30,000 for the construction, you get right around $45,000 per lot in order for him to open the park. And like I said, we do have comps where these kind of parks, once they are stabilized, because the goal after for the developer is obviously to stabilize the park, the goal for him would be to exit anywhere between $80,000 to $90,000 per pad. So for him, an investment of $45,000 per pad would result in an exit later down the line based on the absorption rate and the stabilization rate would be right around $80,000 to $90,000. So with some kind of leverage for the construction loan, this would be a great opportunity for a developer once we fully finish the entitlement and we offer that parcel as a package, fully entitled, shovel ready, and ready for construction. What does it mean? It means that we're investing $2.153 million with a $900,000 seller financing that needs to be paid over the next 3 years. In the $2.153 million, we do have all the carry cost, the land, the interest rate for 3 years, and the cost for the land planning that is included. And the goal is to exit at $5.47 million with an investment horizon exit between 24 to 36 months, which would result into an IRR for you investor between 23 to 38%. I will go over the details depending on how much you invest and depending on how fast we sell the land. Please take the time once you receive the brochure to read the disclaimer. This is an offering for accredited investor. After you provided your KYC on our platform, we would provide you the full accreditation process for you to take part of the 506C Regulation D. Like in any other brochure, we try to provide as much information as possible for you, investor, to understand the full scope of the project. First, we provide a project data room. So this is specifically targeted to have all the information regarding the land, the feasibility study, and all the due diligence that is already on the way. We also provide a corporate data room for you to understand who is the GP, what are the financials of the GP, who is working within the GP, what are the reports that we are giving you, what is the track record that we have over the last 5 years. These are very important information that I would emphasize for you to review. We also provide the full pro forma, which give you the itemized item and cost on where is the capital going once we buy the land. Obviously, here there's no construction. We're fully paying the land, and then after that, we're paying the GP for the fees that are included in the raise, and then we pay the land planners over time as they send us invoice, and LandQuire management as a GP is responsible fiduciary of that of those tasks. And obviously, we're responsible to select the proper broker in order to sell the parcel for the highest amount of capital. We added the Google Map pin for you to exactly see where the land is located. We also added some of the pre-conceptual. Those are not actual construction plan yet. They are simple pre-conceptual that will be improved as we progress for the entitlements. Again, we're going to talk about the market opportunity, the team, the project overview, and the financials. So the parcel is located in Pomona Park, Florida. Pomona Park has a tremendous growth by a major regional hub. It's located between Orlando, which has over $70 million visitors per year, and Jacksonville, which is 1.6 million inhabitants in the metropolis. Pomona Park benefits from an extremely dynamic economic and tourist environment. I really emphasize that you should go on Google Maps, pinpoint the land, and look at all the RV parks that are around us. There is hundreds of RV parks, and here our parcel is located roughly 45 minutes away from St. Augustine Beach for people that like to go to the beach and go back and forth between their RV park and to the beach. We do have a global tourist hub nearby. Again, like I said, 70 million visitors a year, particularly thanks to Walt Disney and Universal Studios and the SeaWorld Orlando. We have a tourist spillover effect. The saturation and high prices of Orlando encourage a shift toward nearby, more accessible and natural areas like Pomona Park. Again, people living in RV parks are people that like to be outdoor. They like nature, they like fishing, they like going to the beach, they like being able to live freely, they like to be moving around, and they typically own their RV and lease the pads either daily, weekly, or monthly, or even stay yearly to the park and go back and forth between where they live and where they want to stay on the park. There's a big growth in outdoor tourism, more than 58 million camping households and 61 billion in spending in 2024. This is confirming the massive boom in camping and RVs in the US. Again, the beauty about this parcel, you will see it in the financial model, is that we are acquiring the land at a 30% discount on the price per acre, relative to all the parcels that we're seeing on market at the moment. Land has a very elastic price, and thanks to our head of acquisition that has been negotiating this land parcel for the last 12 months, it has been a pretty long negotiation with the seller and the wholesaler, because there is a wholesaler in between. You will see it in the data room. Is that we are entering the deal with a 30% discount on the land, the price per acre, and we are gaining pretty much 12 months in terms of the entitlement, because we already have a PUD approval, which would allow us already to do 365 pads. Again, there is more studies that needs to be done in order to fully get this site shovel ready, and I'll talk about it in a second as we talk about the PUD document that was provided by the seller. A little bit about us. LandQuire was created in 2021. We have already 20 portfolios that was completed. This is our 21st portfolio. We have right above $39 million of equity that was raised for our land projects, and over 480 investors. Most of our portfolios have an exit anywhere between 24 to 36 months. And we'll talk about the track record as well in a second. The historical IRR is 22% for our investors on their equity invested. The founder of the company are Thibaut and myself. Thibaut focused on the strategic vision for real estate. He's a real estate broker in Florida for the last 12 years. He had, because he sold it, his property management and managed over 400 properties at one time in Florida. He has a tremendous knowledge and mastered the US market, because he invested already in 25 different states with his capital, and obviously the investor's capital. My background is computer science. I focus more on the technological and processes of the company in order to make sure that all departments are fluid and work together in order to maximize the time frame for the acquisition, maximizing the due diligence and the feasibility study, maximizing the title research with the title company, making sure that it is done properly. Once we close on the land, we want to always make sure that the processes to entitle the land never falls behind. And in order to do that, you as an investor and my team internally have access to a Microsoft digital tool of a project management tool, basically, that allow to see the 360 improvements of all the steps that needs to be done during the entitlement, in order to make sure that we are always below 12 months to get a site fully entitled and ready to sell to a developer. Okay. And obviously on the disposition end, we try to make sure that we pick the right broker in the right asset class that has the most amount of chance in order to get us the best price and best terms to exit these parcels as part of LandQuire, which is a land flipping business. You can see here on the screen the head of departments: Alexander for IR, Willem for the head of acquisition, Christopher Garcia, the head of disposition, Edouard, our CFO, Paul, our head of marketing, and Mohamed, our director of data and information. Below, you will see all the investor relation directors with the language that they speak for you to actually book a meeting, whether you want to meet personally on ground to visit the site, or if you want to do it online to talk about the project. Some of our fundraising progress and efforts over the last 5 years, you can see that as of 2025, we had a 96% growth rate, going from 8 million raised in 2024 to 16 million raised in 2025. The goal for this year in 2026 is to actually pass the bar for $30 million raised in equity. And again, this will depend on the efforts that we do with investors, and obviously some of the parcels that should be selling this year. Some example of sold projects on which investors already received their capital back. The first one is in Yuma, Arizona. which was an entitlement for a 100-room hotel. The hotel is already built, so you can take a look at the track record and the data room here. Bowie, Texas, which is pretty similar to the deal that I'm presenting today. This was a subdivision for 34 SFR lots that we exited to a developer on a paper lot basis. This was a really small market in Texas. I believe we exited at $11,000 per lot. There was only 100,000 people in that city, but that was a great deal because the access was great, the land was flat, and the sewer was already available. We also have Montgomery, Ohio, which is not a crazy return, but again, it was a slower market, and we were still able to make sure that the capital protection was our priority. And it's another example on which we did the entitlement, and we returned equity principal to investors for them to roll over to another deal. Deschutes, Oregon is another deal in which we were supposed to subdivide in 8 lots, and we just decided to resell it as is because we got a great offer pretty quick on the first year of the entitlement, and decided to just exit and move forward on the next round of capital raise. This is the calendar of the ongoing project that we have. A great example on a deal that is very similar to the one I'm presenting today would be Portfolio 10, which is an RV park for 170 lots in Okeechobee, Florida. We're already 95% done in the entitlement, and now we're focusing on the disposition to be bought out by a developer. So same thing, we can also send you the brochure for Portfolio 10 so you can compare. I think the advantage about Portfolio 21 versus Portfolio 10 is that Portfolio 10, when investors invested, we had to do a rezoning and a variance for the septic, which here in that portfolio, we will not have to do so because we already have a PUD fully approved, and we know pretty much exactly what we're going to do on the utility side of things. So it's a matter of doing the work for the next 12 months and really being able to exit that on a paper lot basis. Some of our projects in Texas, it's also good to see the presence that we have in another state. And here you can see the Portfolio 10 that I just talked about. The executive summary, like I said, it's a 65-acre in Pomona Park, Florida. We will develop and resell the 65-acre after the entitlements are done and fully shovel ready. We already have 2 points of access for these parcels, which is required by the city. And on this specific investment, the minimum investment will be $100,000 per investor. The pref return is 10% per year. In fine, again, that 10% obviously is not paid quarterly or yearly. It's paid at the exit because there's no cash flow on the line. And then on top of that, you get anywhere between 55 to 70% of the profit. The resale horizon is 24 to 36 months. Again, we have sold projects as quick as 1 year, and I believe the longest it took us to sell was 4 years. I will show you more specifically here what I think what will happen. Again, I do think that the fact that the PUD is already approved, we could get the entitlement done within 9 months, which would give us another roughly 15 months, let's say, to still be under 2 years in order to resell the project. This is the latest pre-conceptual that we do have. You will see that we have 2 proposed amenity areas, where in this amenity area, which is 4 acre, we're looking to put some storage as well and have more of the common areas with the pool, with the clubhouse, with some of the sports court that would be more located centrally here. In terms of the size of the lot, so currently the size of the lot are roughly around 1,700 square feet, which is pretty typical for RV parks. It's not small, it's not oversized lots. It's really a good size and on market, really what people are looking for. You will see in the data room that we did a full study about how much people are typically paying on a monthly basis. And the average price per lot per month, roughly, for parks is around $633. We do think we could be hitting anywhere between 800 to 1,000 per month per lot for our park, knowing that our park would be brand new and would have a state-of-the-art resort amenities. So we're going to go over that in a second as well. The project timeline is pretty simple. We are finishing due diligence in April and finishing the fundraising in April. We're looking to close the land in June and finish the entitlement in August 2028. In 2027, which would help us to have the horizon of the resale starting from 2027 up to 2029. Again, at the end of the day, the beauty about investing in land and the fact that we do have 3 years to pay the balloon payment is that time is on our side. We do have a full 24 months to wait for the best offer by picking the right broker and structure the deal properly for the developer that will acquire us. And again, we're looking to sell outright. We're not looking to JV. We're not looking to partner with the developer. We're looking to just exit at $15,000 per lot, which is a great price for a developer to actually acquire a piece of land that has institutional size RV park and a pretty steep discount on the cost per lot, knowing that the entire work is done. So as soon as he acquire it, he could already leverage it by doing a construction loan with a private debt fund or a HUD financing, and for him to actually put his equity to work. The investment process is pretty simple with LandQuire. We do have 3 steps. We have the project monitoring, on which you're getting a quarterly report from corporate on the improvements of the entitlement. You can also follow 24/7 the updates that we're doing on the Gantt chart Microsoft tool. And if you have any questions, you can always reach out to us. The legal monitoring, obviously, some people are investors from outside of the US. They don't really have a legal structure or legal setup here for them to invest within LandQuire. So depending on the structure you want to put in place, we can always put you in touch with our CPA and our attorney and our compliance officer to structure whether you want to invest under your personal name or you want to invest under an LLC. If you pick an LLC, do you want to do an S Corp, a C Corp, a transparent LLC? These are important questions that needs to be answered before your investment as well. The accounting and financial monitoring. So obviously, every year we provide a K1. Again, you're a partner in the SPV that is called LQ Investment Portfolio 21. So you buy shares in the entity that own the land. And knowing that you are an equity holder, we do provide you a K1 for you to actually report to your CPA doing your taxes. So that's pretty much it in terms of the investment process. I'm sure that you're going to have lots of different questions based on your case and how you want to structure things. So I would recommend to write questions in the FAQ section that will take questions at the end of the webinar, or to book a meeting directly with one of our investor relation director, so we can put you in touch with the right people. More details in terms of the itemized components of the capital raise. The land acquisition, including the wholesaler and including the interest rate of 7.5% for 3 years, is $1.176 million. The carry cost is basically the taxes and the insurance that we have to pay on the land for the next 3 years. The pre-acquisition expenses include the acquisition commission, the capital raise commission, as well as the entitlement monitoring that we are doing with our project manager in-house on a weekly basis to make sure that the project is done on time. The land planning are basically the outsourced cost that we are basically paying to the land planners, to the surveyor, to the traffic study company, to the topography study that we do, all the reviews that the land planner is doing at the city level, all the costs that we have to pay to the city and the county. So these are outsourced costs on which LandQuire pays the invoice as they come along. So total, we're going to need $2.153 million. We're not expecting any capital call. We have not done any capital call over the last 5 years. We do think this is more than enough in order to actually exit the project. Now, what is the project will be worth as we finish the entitlement and we do have the full plat approved with the engineering of the lots done? We're looking at 365 pads that are already approved, which is basically reducing tremendously the risk of the entitlement. We're looking to value those paper lots at $15,000. The goal is to list them between $15,000 to $20,000 and to negotiate as low as $15,000 with the buyer in order to achieve the ROI of 99% on the equity invested after we pay off the disposition team of 1%, the closing cost, the seller note, and obviously the broker that would help us to source a buyer. So that's a 99% on a very low leverage land investment. If you compare that to a multifamily commercial on which you're getting mostly 60 to 70% loan to cost or loan to value, we are below a 50% leverage. And we do have a piece of land that is already pretty much approved by the county, on which we do have an asset, which is RV Park, that is really in trend in Florida. For people that don't know Florida, feel free to look at all the RV parks. There is hundreds and hundreds and hundreds of RV parks already built in Florida. And we see a tremendous growth of developers trying to keep building these RV parks depending on the demand that the city has. Here, the fact that we're already approved with the size of the lots, with the amount of the lots, is really tremendous and reducing the risk in order to hit the upside of exiting the land within 24 to 36 months. The equity distribution, it's important for you to understand how we distribute equity once we sell the project. Obviously, we pay you back the $2.153 million that was invested. Once the equity investors receive their capital back, we do have a catch-up of 10% preferred return per year. If we sold in 1 year, you get 10%. If we sold in 2 years, you get 20%. If we sell in 3 years, you get the first 30% of the profit. Above that, we split the profit depending on your ticket size. And here is basically the tranches. If you invest between $100,000 and $250,000, you get your 10% pref plus 50% of the investor profit share. Between $250,000 to $500,000, you get 60% of the investor profit share. If you invest anywhere between $500,000 to $1 million, you get 65% of the profit above your 10% pref. And then an investor coming with above $1 million of investment, of equity invested in the SPV, gets up to 70% of the profit. And so based on the tranches in where you get your investor preferred share, you get the total ROI depending on how long does it take to sell the deal. So if we sell in 1 year and you invested $1 million, you would get pretty much the best terms in the deal. You would get a 70% ROI, which would represent to 70% IRR. This is, again, pre-tax. So you would have to study your tax situation in order to understand what would be the net after paying your tax. Again, this is a transparent LLC under which we're buying the land, and the taxes are being paid at the higher level, at the shareholder level, based on depending on how they get taxed. If we sell in 2 years, for example, and you invested $100,000, the ROI would be 64%, which gives you an IRR of 32%. Okay, and it goes all the way to 4 years exit. The beauty about LandQuire is that contractually, if we do not sell the land within 5 years, the LPs, limited partners, which is you as an investor, would get 100% of the proceeds of the land. So that's very important to understand. We have the mantra, saying that if LandQuire do not sell the land within 5 years, 60 months after closing, that means that we did not do our job properly, and we would give you 100% of the proceeds once we sell the land. Obviously, this never happened, and I hope it will never happen. But again, waiting 5 years on a land deal for the land to actually appreciate is not a bad deal. Doesn't mean that we're losing capital. It means that we just didn't find the right buyer at the right time, which is always the risk in land, because as you may know, land is obviously a little bit less liquid than the other asset class in real estate. But on the other end, land has a very elastic price. You can buy land through the open data at a pretty steep discount if you know what you're actually doing on the acquisition and the entitlement. So that was the presentation of Portfolio 21. Now, for you to understand how we structure the data room, I put it here on the screen. And on the data room that you receive after you sign the NDA, you have the contracts that we signed with the seller and the wholesaler. So please review them, put them on ChatGPT, and ask us any question that you have. We do have the land ID images. This is the software that we use to do the pre-analysis, to check the wetland, check the boundaries, to check the topography, and understand a little bit the water flow, the traffic, and the point of access. So these are original study that we have on which you can also ask us question. Very important that you ask as much question as possible. Then we have all the seller documents. So those are documents provided by the seller. The beauty is that the seller already did a marketing presentation, which is pretty nice to see. He provided us also the PUD approval, on which I did a summary for you to read. So first, the project overview. It was rezoned from R2 medium density residential to PUD, which is a planned unit development, allowing a master plan RV resort with flexible site-specific development standards. We have up to 365 total units, included 320 RV sites and 45 park model cabins, or in other words, tiny homes. The resort amenities permitted including lodge, restaurant, pool, bathhouses, camp store, and recreation areas. The key advantages. The PUD allows customized standards that override conventional zoning, enabling higher efficiency and design flexibility. We have a 50 feet landscaped perimeter buffer, enhanced privacy and value. So it's really a setback around the land in order to not bother the neighbor. We have a preservation of natural features and tree incorporated into the site design. Okay, so I'm not going to continue in all the details because it would take us a long time, but feel free to take a look at the infrastructure control, the permitting status, the operational framework, the quality control, and the bottom line for investor, which is we are fully entitled for PUD, significantly de-risk the project. The high density resort approval with flexible standard creates strong revenue potential and a clear path to construction. Okay. So this is in the data room for you to review. The full document is this one, the zoning approval for RV land deal. So feel free, if you want to read the total approval, all the lines and all the details, this is the document. This is just a summary. Okay, this is the latest pre-conceptual with colors. It's a little bit nicer to see if you want to review it. Okay, with different proposed amenities area, with the green space, with the entrance, the way we put it, the lots on the sideway here to facilitate people to come in and out. Okay, and if you do have questions, again, we are at 425 on the model. But we do think that to be reasonable, we want to say 365 for now. And again, if we get 425, then it would be great. We would maximize density, and we would value the land a little bit higher. But again, For the sake of being conservative on the financial model, the goal is to be at 365. And at 365, if we sell within 3 years, we still generate a 99% ROI on the deal and the equity invested. Okay, so this is the pre-conceptual, the county roads, some of the hydrology study, the marketing presentation. So you have an idea of what kind of document that we're going to use in order to sell the site once it's fully engineered and entitled. Okay, so this document, let me see, it's charging. So you can basically take a look at all the photos. It's very rough, I would say, this document, and doesn't really call to developers. I think a developer would need something a little bit more details in terms of the bids, the construction cost, the stabilized value. And this is also what LandQuire is really good at doing. We're going to provide an offering memorandum that is institutional grade. Obviously, this is very mom and pop that they provided us, and we're going to try to improve that. Okay, so feel free to review it. The survey and the topo that was done. Then let's go back and show you here the Instagant. So the Instagant is the Microsoft tool that I was talking to you about in order to understand the improvements that are being done on a weekly basis for the entitlements. This is an example of portfolio 12. This is just, we have the 12, we have the 10 here. We have it in French and in English, and we have obviously the Gantt chart for you to follow along. This document is basically what builds the value in your equity that you invest. These are all the steps that are required in the deal in order to fully go in front of the county or the city, depending on the jurisdiction, and tell them, this is it, we're ready to be approved. Are you ready to give us the plats? Are you ready to subdivide our land and let us start construction? And this is really what we're looking. We're looking for the stamp from the county or the city to tell us, that's it, you can start construction. And that process takes anywhere between 9 to 12 months. And in order to be between 9 to 12 months, we need to make sure that on our calendar with the land planner, we have specific dedicated meetings on a weekly basis, very similar to what you do with attorneys. If you're not on their ass, unfortunately, they're going to fall behind. And I think at LandQuire, we pride ourselves to be really on top of the details that needs to be done and the work that needs to be done in order to entitle and subdivide the parcel to be on market as soon as possible. Again, our disposition department, do not wait for the end of the entitlement to start the sourcing of developers. We try to do it in amount. We try to do it before the end of the entitlement in order to see if there is any LOIs, letter of intent, that can be provided by developers in order to sell the site as soon as we finish the entitlement. Okay, but if we don't find the right buyer, it's okay, because typically we do have an appreciation of 7 to 8% on the land per year for these kind of parcels that are 45 minutes away from the beach. So that's really, really important. So going back to the data room, I believe we are getting close to the end in terms of the presentation. You will see obviously the GSK land planner proposal for them to actually run the civil engineering and permitting for the site. We added you the wastewater plant treatment facility. Again, this site has private utilities, which will include a commercial well on which we're going to pool the water from the Lake Broward next to us at 200 to 205 feet. And then in terms of septic, here we're going to have what's called a wastewater treatment facility, which is very similar to a sewer, except it's private. We are doing everything in-house to treat the water. So those systems are pretty revolutionary and new for people to actually reduce the cost. I think these systems are much better than private commercial septic because first of all, we would have to have leaching field, which would reduce the density, and the cost is probably 25 to 30% higher than a wastewater plant treatment. So if you have questions in terms of the utilities, I'll be happy to answer them and put you in touch as well with our head of entitlement and the land planner. We also have the full financial model, the pre-conceptual, and then we did a market study analysis to study what are the RV parks and mobile home parks doing in the area. So here you can see all the parks that were added with the amount of sites, how many sites they have, which is an average of 200. When it was built, the average rent, like I said, we did an average and we're at $633 per month. You can see that some of the parks are well above that. And knowing that we are a brand new park, the goal is to really be above the median price here of $633. The amount of vacant sites, you can see that most parks are pretty much fully occupied, which is really, really important to look at. You also have the year built, so there's not many new parks that are built, and the goal is that we could bring our clientele from those older trailer park and RV parks because we do have new facilities and new amenities. In terms of amenities, you can see here the parking, the recreation facility, swimming pool, sidewalk, clubhouse, playground, whether the pets are allowed, if it's gated, if there's an on-site staff. So all these amenities are taken into account for us in the design of our RV park to make sure that we can be very competitive in terms of our design and the stabilization once the developer acquire and build the site. Okay, so these are really, really important information that you can pull directly from this sheet and realize how we're going to design and value our site to something that is even above $15,000 a pay per lot. Okay, so these are all the information that are provided in the data room. We will be adding obviously the operating agreement of the entity shortly, within a week. It's currently being created. Obviously the EIN, which is the company number provided by the state. So those documents of the entity on which you're going to invest will be added directly in the data room. And yeah, that's pretty much it on my end. I'm going to take questions. It's been 44 minutes, so we're right on time to take questions. All right. Let me see. Fabienne, hi. Justine, hi. Brent, how did you estimate the $15,000 per lot exit price? So typically for the land, you have to backtrack how much a finished lot stabilized would be worth. And like I said, recently there's a park that sold for $88,000 per pad stabilized. And you need to make sure that the developer can roughly generate 100% margin between how much he's going to pay for the land and pay for the construction versus how much he can exit. So if you divide $88,000 by 2, you're roughly at $44,000 for a finished lot, just completed. We finished and we opened the park. It's not stabilized yet. There's no people in the park. So $44,000 per lot, like I said. We would need roughly between $25,000 to $30,000 of construction for the developer to actually build that. So if you do $44,000 minus, let's say he's doing an in-house GC and he's good at negotiating the construction cost, let's say he's on average at $28,000 per lot. Again, it depends of what kind of amenities he wants to add, but I would say roughly $28,000. So if you 44,000 minus 28,000, I'm getting roughly at $16,000 per lot. Okay, so this is why I'm mentioning $15,000 per lot on the conservative side, because I do believe that a developer is able to build, knowing that there's 365 pad, he should be able to build at 28,000 per pad. Because I mean, it's much easier than doing multifamily. I mean, these are just pipes. It's mostly horizontal work. There's no vertical work besides if they want to do a clubhouse that is stick built. But nowadays, I mean, there is ways to do manufactured home clubhouse that look as good as a stick built clubhouse. There is ways to actually bring great amenities like paddle courts, pickleboard, half a basketball court. These are things that do not cost a lot, but really bring a lot of value to the RV park. So yeah, there's really the way where you deduct a lot of the cost in order to understand how much the developer will be willing to pay for the lots, paper lots. And there's also comps. There's also comps in Florida that have parks that sold above $20,000 that we can send you, $20,000 per paper lot, for you to realize that whether we do the typical comp structure or we do calculating the lot price based on the construction cost and the stabilized price, there is different ways to justify $15,000 per paper lot. Brent, are you planning to sell the project entirely or in phases? No, this is a project that we're looking to sell as a one-off. The developer would acquire us part of his financing. Typically, these developers will come with a construction loan of 2 years or 3 years, depending on what they're able to negotiate as a term sheet with their lender, and they would fill the rest with equity. And they would build the site all at once with their GC, and then open the park. Can international investors participate easily from Europe or the countries? Yes, absolutely. There's only a small amount of countries that cannot participate in our investments, but these are countries that are on the list that I can provide as well. But most people, every country from Europe can participate. I believe every country in Latin America as well. Again, if you have a doubt in terms of whether you can invest or not, based on the country you reside in, you can just type in ChatGPT, can I participate based on my passport? Can I participate in the US? But I would say that 98% of the countries can. And again, you can invest personally, or you can invest in an LLC. You can structure an LLC in the US depending on or if you're accredited or not. If you are not accredited, we can still have you part of our Reg S, because we run as a dual compliance here between the 506C for accredited people that are within the US, and the Reg S for people that are outside of the US. But if you want to create an LLC in the US, you have to be accredited. When is the deadline to invest, Justin? There's not really a deadline. It's really on a first come, first serve basis. Like I said, we typically have anywhere between 10 to 15 new clients every month, plus the clients that reinvest. For example, our portfolio 18 was 90% of recurrence investors. So there was only people that just reinvested. We raised at the moment anywhere between 1 to 2 million a month. So I would say that best case scenario, you have 60 days to find capital and invest. Worst case, the last deal that we actually financed in Florida, which was 2 years ago, took us 30 days to finance. It was portfolio 10. I would say that there's always more demand for people to invest in Florida than Texas. I don't know why, but we are composed with pretty much 85% of international European investors, and typically they see Florida as something better to invest in than Texas, because there are people that come in Florida as tourists. So I think they were more familiar with Florida versus Texas. So I would say if you want to have a spot, you book a meeting with myself or one of the investor relation director, and we try to make sure that you can sign the contract over the next 30 days. Justin, if I invest 500,000, do I have better deal than 100,000? Yes. So as I explained, if you put $500,000, the profit split for you would be 65% versus 55%. So you're gaining 10% of investor profit share. Basically, LandQuire as a GP give you 10% extra on the back end of the profit. So that's very simply put a marketing strategy for people to just invest more and so we can raise quicker. I do think that people investing more should be rewarded. So yeah, that's how the deal is structured. And I believe that's the last question. So thank you, Brent and Justin, for the questions. I am available the entire week, depending on the time zone. Typically, I try to take investors from Europe in the morning, and I'm on EST time zone, so I try to talk to American investors or people that are on that time zone in the afternoon. And we're super excited to basically acquire this parcel. I think there's a tremendous upside as the market appreciates. There's a tremendous, obviously, discount on the land price, and there is already pretty much the approval that is done in terms of the PUD. So there's still 12 months of engineering that needs to be done. We're going to try to reduce that to 9 by being very active on the land planning side, and then we're going to source the right developer. There's lots of developer that I think can profit from that business model by acquiring the land at $15,000, putting $25,000 to $30,000 in construction, and then from there stabilize the park and either refi or exit. I think it's also a great asset to keep long term because you're only profiting from the land. You don't have the risk in terms of the infrastructure. You're just collecting rent based on the land that you lease. And I think as I'm a son of farmers, so I think land is one of the best store of value that you can invest in. And again, it's very simple. What is the definition of store value? Store value is basically something that cannot be deteriorated. If you cannot deteriorate land, that means it's a true store value compared to multifamily or single family residence or storage or any commercial property. I mean, there is much more maintenance that needs to be done. Here with land, the beauty is that you have to maintain the common areas. You don't have the risk in terms of the climate change. If there is flooding, if there is fire, these are risks that you are seeing nowadays in Florida in terms of flooding. You're seeing the fires in California where people are losing their homes and all the infrastructure that they have on top of the land. But if you see what's the land price once there is a catastrophic climate change in these areas, typically the land value is keeping, I would say, a good 80% of its value because people just start building again. And that's the beauty about this RV park, is that not only the developer can create tremendous equity upside, but he can also have a tremendous debt pay down as he pays down the long-term loan after he refis. So there's lots of way for him to build wealth over the long term, having a state-of-the-art RV park in one of the states that has the most demand for RV park. So yeah, overall, I'm super excited, really happy to present that to you. These are not deals that we present overnight. This is a deal that was approved by the board. This is a deal that comes from 1 year of negotiation. We always have 10 to 15 LOIs out, and we're doing 5,000 to 10,000 offers via SMS and mailers on a monthly basis. So I can tell you that in order to bring these deals to the table, this is hard. This is a lot of work, and this is why obviously you participate as an investor once you gain the confidence on our ability to execute. I want to thank everyone for spending the last 56 minutes with me. I am excited to chat with you privately, and I'm looking forward to work with you. Thank you so much on behalf of LandQuire.